G'day Neil, great to be with you.
It's always good to talk to you, and we don't get to talk as often as we used to. But great to talk about this topic today because it's a significant topic and one that as Christians we're mindful of because we are stewards with what God has given to us, and we look at all of our assets, our finances, and we say we're to be stewards with those things. A low interest rate environment, this is like the lowest interest rates that people can remember for a very, very long time. What is it about the low interest rate environment that is good and that could be potentially bad?
Yeah, it's great for lenders, so those people that have mortgages and other debt, and it's not so good for those that are self-funded retirees or don't have debt and are trying to earn an income from their, particularly their fixed interest type investments. So there's two groups of people, and depending on which group you're in, you're going to be either happy about it or not so happy about it.
Let's talk about the good first, and those who have some concerns might like to contribute to our conversation. You might have a question about the low interest rate environment. 1-800-316-316. This is potentially a very good time if you have a mortgage or if you're in business and you're borrowing money. Anyone who's a lender, as you say, this could be a very good time. Just outline just how good it is in case there are those who've missed it.
Yeah, so most recently, the Reserve Bank of Australia dropped interest rates another 0.25%. Now, a matter of months ago, there's only few economists that were suggesting that we'd have another rate cut before interest rates would go up. 12, 18 months ago, the expectation was the next movement was going to be an upward movement in interest rates, but it's actually gone down. So it is great for those people that have got mortgages, and it takes the pressure off in terms of most banks have passed on a bit of the cut, and it can mean that there's a little bit of extra money available to those people who are paying mortgages. But I just encourage people to think about maybe not reducing the amount of their mortgage payment, but keeping it as they are so that they can get ahead a little bit on their repayments, so that when interest rates do go up again, they've got a little bit of a buffer there. Because as you say, it was back in 1990, I think it was, that interest rates were 18%. It's incredible the difference over that period of time, and they've just come gradually down until they're at their lowest point in history at the moment.
Let's dwell on this idea, low interest rates, lowering payments on your mortgage or on your business loan or other loans that you might have. If you do maintain a higher payment level, what does that do for the overall look of your loan, ultimately, over the length of that loan?
Yeah, it significantly changes it. Early on in a 30-year loan, as much as a $50 additional repayment on your mortgage can actually reduce, save you $250 to $300 interest in the life of the loan. So the same impact is being achieved by continuing to pay a higher amount than off each month than you actually are being charged in interest. So it's basically like paying an extra $50 or whatever the amount is off each week of your loan, and it'll both save you interest over the term of the loan and also can reduce the duration of your loan as well. So if it's a 30-year loan, if you kept it up for a number of years, it might get down to a 29-year loan, and so it has great benefits to do that.